Good afternoon, Ashok ji.
Good afternoon, Sidmani Saab, and thanks to FEDI for organizing this seminar. I'm so grateful to all of you.
It's our pleasure, and we are looking forward to some quite interesting discussion with you today as part of our monthly discussion forum. So at the outset, I would like to welcome all our participants, and we have got already almost 50 people who are already logged in, and others are joining in. This time I must tell you that interest amongst the community was quite high, and many people, they called up us, asked for the details, how is it going to be, what is it, and the number of registrations also was pretty decent. So people are still joining in. So not to keep the people who are punctual, not to keep them holding, I would like to just roll out the thing. Just as a brief introduction, Ms. Gautam, this is our regular monthly program which we have, where we pick up some contemporary topic and have a kind of free-form flowing informal discussion, which is more like which we call is governed by the Chatham House rules. And we clarify to all the members that views expressed over here, since it's a very informal chit-chat discussion, are more personal, and one should not take it to hold the person accountable for any actual transaction, dealing, etc. If you want to do, people are always welcome to reach out to us or to you. I think I can take that liberty in this case.
Definitely.
For more details, and it's better you refer to that regulatory guidelines and the guidance, whatever is there, before undertaking any transactions. For reference and guidance, we are always there. So any discussion over here should not be taken as a final word. So proper checks and due diligence is mandatory, and one should take care of that. So the topic, as we are saying, is something to do with the IIBX, which you are the ones who have been steering that effort. And I must say that India as a society, we have got some kind of unexplained fascination for gold. And this is what we have been seeing right from our ancestors and parents, grandparents, and including my wife. I must say that despite all the efforts, I have not been able to convince her that sovereign gold bond or the digital gold is better than the physical gold. I don't know whether it's she is different, to all ladies or females are like that, but this is well known that India is one of the largest gold consumer, and that too despite having no local production facilities. And we all know in the past, India was also used to be referred as the Sone ki Chidiya kind of thing. That is metaphor also is coming from there. Yes, the fascination for gold. And unfortunately, despite gold playing such an important role in our culture, in our history, and in our social life, somehow the market in India, as I see, has been solely dependent on the international markets, international flows, whether in terms of pricing, in terms of quality controls, in terms of distribution channels, etc. And now, as we discussed last time, and we see from the newspaper reports, that this is the first international bullion exchange which has been set up in India, which you are spearheading. So before we go into any further discussions, I would request if you can just give a brief on what is this India International Bullion Exchange, what was the thought process behind it, and how is it going to help make the things a little more structured, organized, and efficient going forward. Over to you, sir.
Thank you very much, and for these introductory comments. I'll try to do my best and hope to keep audience engaged. So just to tell you, India International Bullion Exchange, IFSC Limited, there are two key words towards the end, which is IFSC. So this is an International Financial Services Center. And this International Financial Services Center is essentially a special economic zone for financial services. And as per the Act of Parliament, there was a unified regulator created called International Financial Services Centers Authority, which, I mean, if I can say, roles in SEBI, RBI, IRDA, PFRDA, all into one, then it becomes a unified regulator. So any of the financial services which take place, IFSC is the unified regulator for that. So having said that, there was this thought process among various think tanks. There are various agencies who were, including the Niti Aayog and India Gold Policy Centers and many other think tanks who were looking at the gold and what type of trading mechanism should be there, because India is a large consumer, as you mentioned. There is a fascination since centuries, traditionally, family after family, there is a fascination for gold. So how can we reclaim a place in the global bullion market? So we essentially are a large importer, around 800 tons to 1,000 tons in various shapes and forms. We import gold. Idea was that, is there a possibility that we create a international exchange whereby the prices are quoted in dollars, and because of the large physical volume which India imports, can we bring the entities, which will explain what are those entities on the exchange, and they can somehow become initially to begin with price taker, then price influencers, then ultimately the price makers. Now, this is a journey which we intend to undertake. There was a lot of discussions. There were many papers which were exchanged, views of experts taken. International exchanges also were studied. Some of the notable exchanges like Shanghai International Exchange is there for the bullion. Similarly, Borsa Istanbul is there for bullion in Turkey. So these examples were also studied. And then it was decided that we should have a international bullion exchange whereby going forward, I mean, today, this has become one of the channels whereby the gold import in the country is rooted on a international price exchange platform where the sellers put their offers, the buyers put their bid, and then there are prices discovered on which the trade happens. And essentially, the way it is envisaged in the beginning is that it is an exchange where when the price discovery happens, this is essentially for the physical delivery of the gold. So this is the thought process, and whereby at some point of time, which when it happens, I am not too sure, but I think the thought process was there that the way in China, the gold is imported through the international bullion exchange, and similarly in Turkey, the gold is imported through the international bullion exchange, which they have in their shape and form. In India also, can we import the gold through the exchange, where the price is visible to all, buyers are able to put their bids, and also then it becomes one channel where everybody is aware what type of price is being quoted for import of gold in India. So these were the thought process, but these were just very initial stages. Essentially, the idea was, can we actually create an international exchange? So when the GIFT City was conceptualized, it was emphasized as a place for, of course, the fintech as well as for the finance piece. For the finance piece, this one thing which has been being said in the market is like this, that India is a large consumer of various commodities. But essentially, for all the commodities, we go outside India and the hedging is done there, the price is taken there. Is there a way we can bring some of that global trading into Indian shore? And IFSC is one such international financial center which has been envisaged by the government, where the exchanges are there, and exchanges have come up and tried to set up various products whereby the commodities are traded. For the bullion, a specific exchange was designed to be created. I would like to tell all your audience that the top 5 market infrastructure institutions of the country, namely CDSL, India INX, which is a wholly owned subsidiary of BSE, NSDL, NSE, and MCX. So all 5 of them have come together to form a holding company. and they are the ones who have set up this exchange. So India International Bullion Exchange is in IFSC area, regulated by IFSCA. So this is just a brief I wanted to tell you before I
All right.
proceed further, and as you asked the questions.
Thanks a lot, Ashok. Just one thing which stuck out, basically, as you said, that looking at that our size in that consumption market in the world for the gold, etc., what we are trying to do is trying to, if I may use the word, claim our rightfully deserved place in that marketplace over there, in terms of not just as a consumer but also as an influencer for the price, moving from price taker to price influencer, and then hopefully the price maker. One thing which struck me, you said that you're operating under the unified regulator, which is IFSCA, but as the name suggests, is that in International Financial Services Centers Authority. But on the one hand, we are talking about the bullion. To me, as a, if I look at, and I'm sure it would be there for many of the participants over there, how is bullion being looked as a financial service?
Okay, so it's a good question, because there are two parts to it. One is bullion here on the exchange is traded as a security. So the bullion which comes in our vaults, essentially there is a bullion deposit receipt, which is a security under Securities Contracts Regulation Act. And that security as such gets traded on the exchange. So this has been brought under the ambit of financial services. And not only that, even the bullion vaulting has been brought under the financial services. So because now these two activities have been brought under the financial services, that is why now IFSCA is regulating these activities. So this has been done with the due process of law, and various amendments in the rules and regulations and act have been done.
No, that is a big thing, if I may say, especially for the people who are investing in gold, looking at it as an investment vehicle, as an asset class. For them, instead of owning, storing the physical gold, etc., they don't need to do all those hassles. You will take care, and people can simply hold and trade in that BDRs, if I may say, bullion depository receipts.
Ashwinji, I think what we're saying is, I was going to say it in the end, but I think let's begin from there. Because we actually, one of the goals which we are now articulating, and we keep discussing at various fora, is that we would like to project and promote India International Bullion Exchange as a one-stop destination for the global bullion capital, which seeks investment in the bullion. So like we seek capital in India for various projects. So what we are saying, we are providing vaulting facilities, we are providing trading facilities, we are providing, there is a, as we go on, we'll also explain, there is a demat process is there, because there is a depository which we have formed. So what we are saying is, the global investors who want to, because in each investors or in every investor's portfolio, bullion has some space. So right now that investment usually takes place in London or Switzerland or Singapore, or maybe Dubai or some such centers. What we are saying, why not IFSC? Because NRIs have a big fascination with gold because of the cultural affinity. PIOs are there, and there are various investment vehicles which are being promoted, not only outside India, but also in IFSC. Just to tell you, there are alternate investment funds in IFSC who have started a dialogue with us that they would like to invest a part of their fund money in the BDRs, and how to, and we are just working with them. So you really said it. What I thought I'll say in the end, that obviously one of the objective also is, its import is just one of the very small piece, though it is a significant piece for us. But for your audience, probably we have to give a much broader picture we have to paint. And idea is also that the global bullion investment capital, we should be able to attract in IFSC.
Okay, that's the investment part of it. But as we initially, you also mentioned that we have got a very large consumption demand also within India, for which obviously there has to be a physical import into the gold. For that, how this IIBX is going to make the life easier, how is it going to facilitate, and also if I may add, what role, I'm coming now to my piece of the business, what role the FX market or the AD banks can play in that? How is that connected?
Shreeji, in fact, that was one of the reasons we reached out to you and we had this long chat whereby we wanted the AD banks actually to be aware. If I can quote the Reserve Bank of India circular, it's RBI 2022-2023/57 APDIR circular number 4 dated 25th May 2022. Now, this is the circular which Reserve Bank of India has issued. So I'll tell you why this has been issued. So what we are saying in IIBX, we are saying that this is one of the channels for gold import in India. And how this is all enabled, let me go step by step. The first step was that, as you know, DGFT essentially says that which are the agencies who can import gold in India. So DGFT has said nominated agencies, and then they have also said any of the banks so nominated by Reserve Bank of India. So we have nominated banks and nominated agencies who are authorized to import gold. Apart from that, DGFT has this year issued instructions whereby they have said that the qualified jewelers, the entities which meet certain specifications as given by IFSCA and called, so those who are meeting these specifications are called qualified jewelers. So these qualified jewelers, as specified by IFSCA, then become authorized to import gold through IIBX. So this is what DGFT has done. After that, what happened? Once DGFT has enabled this import for the entities called qualified jewelers who meet certain criteria, then these qualified jewelers reach out to us and apply. And after scrutiny of their application.
Sorry to interrupt. So here we are talking about a third new entity. There are nominated agencies notified by RBI, as you mentioned, nominated agencies notified by DGFT. Now there is a third category, which is qualified jewelers.
Yes.
Okay. Yeah.
So this is a step in the form of disintermediation, whereby the end user, the qualified jeweler who is a manufacturer of jewelry or a bullion dealer meeting A, B, C, and D criteria, can be given an authorization by IFSCA that yes, you are a qualified jeweler, and for the next foreseeable period, you have to continue to meet these criteria. Then you are authorized to import gold directly from IIBX.
Okay. Now, since you mentioned about the RBI circular, I would like to just maybe go a little more into that. Since this is something which a third category which has been already identified and based on the accreditation provided by IFSCA, they are now eligible to import gold, obviously for which they will be using the banking channels for making the payment. And other thing, as though you mentioned that all the gold pricing, the trading, etc., everything is happening in US dollars at IIBX. Towards the end, I'll come to that. When do you think we can switch to rupee over there as well? That's as of now looks like a moonshot, but I'm sure with you over there that will be within easy reach very soon. So for that purpose, then what are the guidelines? I think that circular talks about how the funds can move and in for the advance payment. Would you like to touch upon that? Give a little brief on that piece.
Yeah, so we'll go step by step. There are a few fundamental things which are required. So first thing is by this circular, Reserve Bank of India has allowed for the first time to remit advance payment for import of gold. So this is something which has been enabled. There is a simple reason, when we, the IFSC team was negotiating with Reserve Bank of India, and I was part of many of those discussions. So I'm not getting into those details, but this point came up that because somebody has to come on exchange to trade means to import, to buy, so they will need to remit dollars. So that is why this advance word came in, that there is advance remittance of dollars so that the money is available for buying the gold on exchange. So this was one thing. But before that, let me also tell you that Reserve Bank of India has also given various instructions in this circular. So the first instruction is dollar is permitted to be given in advance, but then there are restrictions that within 11 calendar days, the transaction must be completed. So that means, we are becoming conservative. So we are reading it as calendar days. So it talks about 11 days. And so what we are saying, say if first on December, the dollar is remitted to IFSC banking unit because our accounts are there. Then by 11th, the gold import transaction should be completed. That means the qualified jeweler has done the trade, let's not put the word trade because trade has a connotation of buy and sell only, because Reserve Bank of India has rightly stipulated that qualified jeweler can only buy. So because DGFT had enabled qualified jeweler to only import, so that's why the qualified jeweler can only buy. They cannot do buy and sell, or they cannot sell. So in our exchange, we have also taken care that we have disabled qualified jewelers from putting any sell transaction. So qualified jewelers, once they remit the dollars, they will be able to buy gold on the exchange. And within 11 days of the initial remittance, they will have to file the bill of entry with the customs so that the import in DTA area process gets completed. And there is onus on us as well as the trading member in the system that if there is a residual amount left, say for example, if $1,000 has been remitted and the gold purchase plus various charges which are there related to that is say 980, then that $20 we must remit back to the account from which the dollar got originated by 11. So within 11 days, the remaining dollar should go back, or the gold which has been purchased, the bill of entry should be filed and the import leg should be completed. This is related to the 11-day piece.
Right. So basically that all the IDPMS cycle, if I may say,
yes,
that transaction entry, initially the creation of ORM and then the bill of entry coming in, and the transaction should be closed within 11 days. And if the import is not happening, then money should be coming back. And that also through the same channel, same bank only, I believe.
Yes, it will go back to the same bank.
Okay. That's, yeah.
Yes.
Please carry on.
Yeah. So I'll just a little bit here explain one or two things which are prerequisite, because a few qualified jewelers who have been given the certification by IFSCA, and they have also done all other they have opened the demat account as well as they have opened the account with a trading member through which the transaction will flow through. Then they when they went to the AD banks, they realized that the AD banks were not ready to remit dollars, and that is where we thought, this forum we will because here there is one word which is written, and I will just read it regarding that. There is it's written in the circular that they will have to have policy. They will have to have a policy which is duly approved to enable these remittances. So what we realize that some of the banks have said that they do not have the policy ready, so they are not able to remit. So I'm just making a request through this, and if I can just read it.
I think you're referring to para 5 over there on
Yes,
page number 3. The AD banks may frame their own internal guidelines.
Yes.
To deal with such cases.
With the approval of their board of directors.
All right.
So under this this particular line, a few of the banks have said that they have not yet framed these guidelines. So my only humble submission is this: these are May 25 circular, APDIR series circular. So may I request that if this can be speeded up, because this is unnecessarily putting some of the qualified jewelers who are coming through some of the banks into some discomfort.
Right.
Though, just to tell you, we have been able to do some transactions. There are few banks who have already enabled these things, and transactions are happening. Daily small transactions are happening. We have not yet gone in a big way because still everybody is trying to understand how this works, and I'm sure this discussion in this forum is also going to certainly help us to move ahead.
All right. So as I can say from the RBI guidelines, the circular which you're referring to, the May 22 circular, I think the instructions are quite clear and well elaborate enough to explain what is required, what's expected from the banks. But I'm sure as more and more clients reach out to them, the banks will be taking care of it. But getting the board of director approval and the policy, that I can understand, is a process which takes its own time, because when you have to reach up to the board of directors, there are several tiers in between. And I know in the free market where we are operating, that the market pressures will make all these banks move and take it up to that right conclusion with due course of time. But I do appreciate your concern that maybe it is better that banks take cognizance of it and start working on that in the right harness. So that's one way, especially as far the import into the country is concerned.
So
That's
if I can
yeah.
just, Ashwini, there is one more important piece, how this, on what basis the dollar will be remitted, because that is one question which Reserve Bank of India had also asked during that. And this is now stipulated in the circular also. So just to tell you what IIBX is doing, whenever the request comes from a qualified jeweler that they want to import, say, 10 kg of gold, the IIBX, if you go through our website, it is iibx.co.in, which I will also put on the chat. There we have stipulated there is something called AD letter. No, what we have given it a nomenclature called authorized dealer letter. This is essentially the letter for the AD banks. So on the request of the qualified jeweler, we issue a letter addressed to the qualified jeweler, whereby we give various the quantity which they want to import, the price on which last traded price, etc., a 5% intraday margin, and our cost, and then what dollar amount is required to be remitted. In this AD bank letter, let me also tell all the audience that we also write the bank name and the bank account number, which qualified jeweler at the time of getting onboarded with us had given, that this is the account through which the dollar will come. In fact, the qualified jewelers have option to give at max only 3 accounts. So, some have given 1, which is okay, and some have given 2 also. But in each of our letter, that bank's name and account number is given, so that when the letter goes to that bank, they know that this is what they have to do. So it is not a random letter that it can be taken to any AD bank. This is point number 1. Also, in all of our letters, we always give the reference to the previous reference. So that means if today he has made a request for 10 kg, we also give the letter reference of the previous request which he has given, so that AD bank is aware that previous request was, say, for 5 kg, whether he has done those transactions or not, and he can make an inquiry with the qualified jeweler. So this is just to facilitate, because we are also very much part of the financial ecosystem of India, as well as IBUs which are in IFSC. So just wanted to explain this process to everyone.
All right, just two points which come to my mind based on what you're saying. You're trying to be more transparent and share as much information as possible with the AD bank, which is a very positive step, I must say. One thing, the amount, that rate is good, since this is an advance payment, the rate is going to be fixed, I believe, subsequent to that remittance, which means the remittance will have to be done based on some estimation, and there will be some plus or minus. Hopefully one will have to err on the higher side, and the additional balance amount will have to be remitted back. That's one piece. Do you see that can be some of the things, small value transactions here and there, that can be a concern? How we can, if possible, in the current setup, is it possible to address? And second, when you said that you are also giving reference to the previous transaction of that thing, that qualified jeweler, is it previous transaction for the qualified jeweler or the previous transaction the QJ has done with this bank? Because one qualified jeweler can be dealing with 3 banks at max, as you said.
So what we are doing is we are giving the last reference number. So we request that, the AD banks, when they look at it, they ask if it is only one bank, it is fine, because then they will have that reference. Then they should ask for that letter, if they had gone with other bank, what happened to those transactions. This is just to give them an extra leverage in their hand.
Right.
But let me come back to the first point which you mentioned about. So I tell you how we are giving the price. So we are giving the price on the basis of when at the time when the request is being received at the IIBX. So the last traded price. So if the request has come, say, at 4:30 this time, so just before that, what is the last traded price? If, for example, there is no trading which has happened throughout the day, but then what was the last offer put? So that means there is a seller who has put the offer. So what is the last offer? If that is also not available, then we go by the last closing price. So closing price in any case is available. So that we give, plus, as you mentioned rightly, to err on the caution side, because you can't remit every time because the price can go up or down. So what we say, we just take a 5% variation margin. So if it is $100, then we say, okay, 105, and then maybe our charges of 50 cents or some such thing. So that is what we are requesting them to remit. But we are also giving one flexibility to the clients, because sometimes the clients, when they are giving the bigger orders, we have seen a single lot of 77 kg being traded. So when 77 kg was being traded, so there was a big amount which came. So in that, the 5% itself becomes a bigger lot. So what we are permitting, that in case the dollars which are coming, and if you are able to transact, say, based on the current price, instead of 77, 78 kg, it is okay, because ultimately you are filing then the full amount, bill of entry and all those details in the system, and its system can track itself. So this is the point which we are saying. And after that, whatever is the remaining amount, we let it go. But let me also come back to another point. Many of the qualified jewelers, what they've said, that they will be coming on a running basis. So then we calculate these 11-day period on a FIFO basis.
Okay.
Okay. So say $100 has come on first. He has transacted $80 on say day 3. So 20 is still remaining. On day 4, another 100 comes. So, but after that, there is, or till 12th, there is no other transaction, then we'll return that 20. This 100 will 11-day count from the 4th day. So that is the thing which we are doing. So this system has been developed, and all banks in IFSC, IB, who are our clearing banks, have been shared these details, so that we are tracking every day. So at the end of the day, all of us, reconcile the dollars, what is the time, because we have to be very mindful that we do not ever make a mistake of, letting crossing one day what is RBI stipulated. We have to, within a day before itself, return the money.
That's very true, because that can be quite a sensitive issue, and especially when a qualified jeweler is dealing with more than one bank, and there is a unified account over there on running account basis being run. As an individual bank, it will become difficult for me to figure out that whatever had gone from me, how has that been adjusted?
Yeah.
How has that been done? Is there any thought process on that, or entire information will be available to all the AD banks of each qualified jeweler?
So there are two parts to it. One is the AD bank itself who is remitting.
Yeah.
Okay, so they can also, because see, this circular is addressed to the AD banks, so where they are talking about the 11 days. So AD banks must have some checks at their end also for these transactions. But we are not leaving it. It is the AD bank's responsibility. We are also taking the equal responsibility, and the IBU branches which are here in IFSC area, so they are also keeping track of it. And on that basis, what we are ensuring that this 11-day norm is never breached.
So I think that would be easier as long there is only one AD bank. The moment there are more than one AD bank, it may create some kind of monitoring and tracking, because if from me, I'm the AD bank, the client had sent $100 and he has brought in goods worth $95, and $5 gets adjusted in the next future import, which happened through another AD bank, then it will become very difficult for the first AD bank to track and confirm and see, okay, yes, actually the gold import has happened because that has gone to the other AD bank. So multiple AD banks can create some kind of direct monitoring and tracking issues on that, I believe.
I think what you're saying is absolutely correct, because this is one thing which has been debated. This option of more than one has been given on the basis of what the clients have said, because they have said that they operate from different states.
All right.
And there are big players who have GST numbers across, and so there could be some states which are not open, those kind of things they had mentioned. But I think as we go on, both sides will evolve more foolproof method to control this.
That's true. As we progress, of course, we also learn from it. There might be some small corrections, course correction need to be done, or small modifications, and tools to monitor will also come up. I think with collective, as you said, that you also are taking equal responsibility and not leaving it only to the AD banks. One thing which now I'm comparing with that EDPMS, IDPMS, since you mentioned, is there any mechanism, though it's a system is quite new, any mechanism, something like caution listing of exporters? We have got something like caution listing, somebody who has been defaulted, who has defaulted, or who has been repeatedly looks like suspicious kind of thing. Any thoughts on that? Or
So,
maybe AD banks will be able to monitor that better.
Okay, so this is, I think, a very good point. And if you see the recently AML CFT guidelines have been issued by IFSC. These are very comprehensive guidelines, and on the basis of that, we are required to have various categorization for the clients. So I'm not spelling out all those things here, but there is a categorization of the clients, and also, what has been their past record and how much they are, importing now. So all those things are tracked. That is one thing. But the second piece, obviously, is that there is a reporting of higher value transactions on both sides at, if I can use the term DTA area as well as in our area. So that piece is always there. And so I had not spelled out the criteria, but on the qualified jewelers, one of the very critical criteria of onboarding a qualified jeweler is what our regulator has stipulated is the fit and proper criteria. Now, it's a very exhaustive, list, and not anybody and everybody can become a qualified jeweler, because there are around 90-95 checks which we have some softwares. We run those names, not only the name of the company, the name of the, if they are promoter or partners, their names. If it's a private limited company or public limited company, then their material shareholders, that means anybody is holding X percentage or more. So all names are run through against those checks. And only when somebody meets those criteria, other than the net worth and other such thing, then only, because this has become one of the key points for us to keep some of the names away from the qualified jewelers list, the fit and proper criteria.
So the entry barriers are quite high. There are adequate checks and controls on that.
Adequate checks, but nevertheless, obviously in the financial market, as you know, we all have to keep our eyes and ears open, and we have to keep sharing information. So even to the AD banks also, if something they believe that the qualified jewelers whom we have onboarded and they hear something or they find something amiss, we'll be happy to receive any information from them regarding this.
Right. So Ashok, before I go to the next question, one message for the participants. If you have got any question, anything you would like to share, please raise your hand on the chat window. We'll take it up maybe in next few minutes, one by one, we'll take it up so that you can address your queries or questions to Mr. Gautam. Ashok, just one last thing which is coming to my mind. I know we have discussed about these, how the import into India is going to happen, the role of the AD Bank, RBI guidelines, etc. But I think what you are working over there in IIBX is much more than that. There are lot many new products in the offing, lot many new things in the making. What is all that? Would you like to just give a brief on that? How is it going to, if I may say that, transform the way bullion business is conducted in India?
Thank you, Ashwini ji. Actually, you're making me all excited now because I am actually all pumped up. But let me tell you many of the things which I'm telling you. I mean, though it's a Chatham House rule, but also a caveat that many of these things are under discussion with various authorities, with regulator, and some of these things are still in infancy. But you know what I'm trying to give a way ahead, which we will work on, and many of the things will happen little early. Many of the things will take their own time. So on for the domestic piece, let me tell you what all we are trying to do. So one is the gold import in India for the jewelry manufacturers, but also we are.
And for that gold import, I missed out one point, that though there is a 11 days time given by RBI, but the processes which you are setting up, I think that actual transaction can be closed within much faster, much shorter than 11 days.
Yeah, so just so thankful to you for raising this point. I have a few couple of dates which are very important for us. 29 July, that's the day when Prime Minister Shri Narendra Modi ji launched IIBX in GIFT IFSC. After that, the next important date for us is 11th October. You will say why? I'll tell you why. Because 11th October, we became the first and only exchange in the entire globe where the physical gold came on that day. The dollar came from DTA India that day. 100 kg gold came. BDR got converted same day. Dollar came same day. Dollar was cited and the credit was given to our clearing. We enabled the trade for both seller and buyer. The trade was done. Dot at 6 when the clearing starts, the clearing files were sent to the depository and vault. From depository to vault. The buyer had given BDR extinguishment request. The buyer had filed the custom duty and the bill of entry filed, and the physical gold came out the same day. This has never been done. And when I was in Dubai and in the DPMC conference, I narrated this. There was a huge clap in the audience because everybody talks about initially T plus 15, T plus 10. They're still on T plus 2. And we demonstrated T plus 0 and, same day gold delivery. And I just don't want to, but let me tell you, we are working on a model whereby right from remittance from India to BDR credit should happen in 4 hours. Essentially, what we are going to work on is instead of a T plus 0 model, we are going to work on a T plus 30 model. You will say, what is this T plus 30? T plus 30 is T plus 30 minutes. We'll run settlement cycle every 30 minutes. This is unheard of. When I said this in the DPMC, they were all aghast. They said, how can it happen? We said, the technology is so advanced and I have the dollar and the BDR with me already. Why should I wait in the evening for settlement? Right? So it is all doable. Our IT testing is on. Again, as I said, there's a caveat, we have to go to the regulator for various things, but demonstration of delivery same day has been done. So and this is what we want to tell. So today our vaults are in GIFT City. We are going to have at least 5 or 6 more vaults to cover the length and breadth of the country. Government has already enabled that in any of the SEZs, we can have IFSC approved vaults. So this is also going to happen. So some of these things I thought, thanks for pointing these out, though because of the time, I have not gone into too much of details, but these are very exciting things. So this is one thing. Second is we are going to make gold available for exporters in SEZ area. As just to tell you, IceGate is getting linked with GIFT SEZ very soon. That work is on. Once that happens, then on the basis of advance authorization and even on the basis of the bank guarantee given by the QJs, we'll be able to give gold for exporters of jewelry. Then we are working on this is again under discussion on a product for gold leasing and gold metal loan. We'll see how it pans out. This is the domestic part, but on international part, there are many things which we are trying to do. We are working on a gold repo product. That means BDR, which people are holding in their investment account or in their demat account, they will be able to generate dollar liquidity against it. So whether the Indian banks participate in it or not, or the foreign banks participate, but then the AIS, family offices who are surplus in dollars, or some of the foreign banks who are showing interest to come on exchange, they will be able to participate on both sides. Then going forward, we are again going to launch various plans for the NRIs, PIOs to invest in BDRs. We are already talking to the wealth team of various trading members who outside India. We have made presentations to them. So that also looks very promising. Apart from that, we want our vaults to be used as like globally, it is loco London, loco Switzerland, those swaps are there. So we'll have loco gift city swap, where our vaults, the gold which is here, the gold can be swapped with London. The gold can be swapped with Dubai gold. That is something which we'll work on. We'll also work on our BDR to be traded on some of the other exchanges. And there are other plans where we would like the South Asian countries to actually come on IIBX and source their gold requirements through us. So as we go on, this is gold, then silver. Silver, we believe, should come by March. Because some enablements will be required from DGFT and all, but we'll be also coming up with the silver and going forward with platinum and other things. So it's going to be a very exciting journey, and we'll keep coming back to you to request so that we can disseminate more and more information to the AD members.
Happy to be of any help we can be. But one point which you mentioned, T+0, T+30, that is certainly going to compress the working capital cycle and help a lot for the exporters and the business QJs over here in reducing their working capital requirement. That's a big plus, I must say. So we have got some questions on the chat. I'll take it up first, and then we'll come to the people who have raised their hands if there is any. So the first thing, this is from Aparna, but she wants to know that AD Bank will have to remit the amount directly to the overseas exporter supplier or to the account of the clearing bank authorized by IIBX.
Okay, so I tell the process how it works. So all the qualified jewelers have a trading member or a clearing member. Those who are the entity, these are the entities in IFSC, governed by IFSC. So they are IIBX clearing members or IIBX trading cum clearing members. So you will have to remit the dollar to the account of the trading cum clearing member. And in turn, trading cum clearing member shifts this dollar to IIBX clearing account. But let me also tell you, to be on the safe side, what we have done is there is a unique client code which is created at the exchange level. And in our AD letter also, which we'll be giving to you, I mean, to the qualified jeweler and through qualified jeweler to you, it will also contain a unique client code for that client, which you will have to mention in the SWIFT. So through this unique client code, the dollar is tracked till the end. So just to answer your question, the dollar will not be given to anybody else because here IIBX is a counterparty. So ultimately the dollar is coming for IIBX and gold will be given by IIBX. Here I'll just make one more point. There might come a question that whose invoice it is coming. So just to tell you, customs has already notified it. There is something called BDR extinguishment summary. BDR extinguishment summary contains India International Bullion Exchange name and our depository's name. So that is the that acts as an invoice for you and for customs. So counterparty is IIBX.
Thank you. Now the next question is very interesting, Ashok. You are moving seemingly at a pace much faster than the rest of the system. The question goes like this. If you can read in the chat forum, I think. The few clients are saying that when they see a good price and they want to buy and request us to remit the amount to IIBX because our Nostro account with US-based bank, sighting of funds by IIBX takes place on the next day, but the value date is of the same day. Now customer says by the time IIBX cites the funds, the price would have moved. So here we are saying that some of the old traditional systems seemingly moving much slower than what you are trying to achieve.
Okay, so I think we have already spoken to our IBU banks. So the three clearing banks, I'm not taking the names here. Kindly go through my website. But you know what our clearing banks have said, that any remittance which is originated from their end, they are on the basis of the citing of the SWIFT message, they are giving credit. So when I told you about the 4-hour cycle, what we are working, So essentially, we have negotiated with the banks that once they cite the SWIFT, so 2 hours is we are giving the dollar rupee conversion and the SWIFT to come to IBUs. Okay, what IBUs have told us, once they see the SWIFT and they are able to online check the dollars, they will give the credit. So the 3 clearing banks have said within 2 hours, they will be able to give the credit. But I take the point that there could be issues with the banks who are not having the accounts directly. So there it could take some time, but there is good news coming. So if I am not, taking the thunder away from my regulator, there is already work on to have a dollar clearing in IFSC. So once that happens, so from any of the banks, the dollar comes, we will be able to receive the dollar credit within 2 to 3 hours.
Okay.
Now comes the point about the price has moved up or down. See, that's why we are taking a 5% margin, because price will move up and down and they will have to see. That's what we are saying. This is not for speculative purpose. If you want to import, so you will have a requirement, and requirement will be on a daily basis 5 kg, 2 kg or 10 kg or whatever. So on that basis, the price will be during the day also it keeps going up and down. So on the basis of that, today from 9 to 5:30, you can hit the price. Very soon, we will be coming with a 22-hour cycle. So once you have remitted the dollar, even in the night, you can hit the price.
Okay, so that
this is
would
just
be much better.
Answer that question, and it is a desktop convenience with the client. They can just see the price and click it. And also they can trade on their price. It's not necessarily that you have to hit the offer. You can say, this is my bid. It is quite possible the one who is selling might hit your bid price. So you can trade on your price also. Trade means you can buy on your price.
That's right.
Stop using the word trade in the context of UJ.
You can leave a bid in the system, basically.
Yes, yes.
All right. So there is one participant, Kiran Shetty, has raised hand. Kiran, would you like to?
Sir, there is one from Vishal Mehta. I'll just quickly answer.
Yeah, please.
So 75 qualified jewelers have already been issued letter by the IFSCA. There are other 35 applications which are with me. So if all of them get through, it will be 110. So 75 are already on board. So my request to all the AD banks is kindly market yourself, read those names and offer your Forex services to them.
Okay. The question from Kiran Shetty is that BDR numbers are available only in extinguishment summary. BDR numbers are not reflected in contract note nor in DMAT account. Also, there is no common reference field in the contract note. BDR extinguishment summary and credit in DMAT. Above issues, if addressed, will help banks in reconciliation, especially when volume go up. It's in the question answer. I think Q&A window.
It is in the Q&A. I'll just click on the Q&A. Okay. Yeah. So let me, Ashwini ji, let me just try, what essentially is happening. So see, on our system, this is little different from what SEBI is doing in the domestic exchanges, which I am not getting into. We'll discuss at some other time. But in our system, we have a one-to-one congruence of the BDR with a bar. So any gold bar or any silver bar later on when it comes, the number of that gold bar is edged on the BDR. Okay, but on the trading system, what is being traded is the units of the BDR, right? So the units get traded and the contract note is saying these are the units which are there. So if you ask for the BDR account summary of the qualified jeweler, his DMAT account, there you will get the BDR number. But for the contract details and all, there it only talks about the units.
Okay.
Yeah.
So there is a question from Archana also there. What are the current RBI guidelines to allow advance import payment for gold bars for non-qualified jewelers?
This is so these guidelines are for qualified jewelers.
Only
so
for the qualified jewelers,
so
basically.
Non-qualified jewelers, I am not qualified to answer.
not yet. That as we said that there are dominated agencies as notified by RBI, notified by DGFT, and this is the third category created. And for people who are outside these three categories, they are not allowed to import directly. They will have to go through one of these notified agencies. And where can we find the list of updated qualified jewelers? That again, Archana is asking for that.
Yeah, it's on my website. It is also on the website of my regulator, IFSC.
Okay, that's
75 names are appearing.
All right. Then there is I think we have to keep switching between different windows. There is a question on the chat window again. Basically, uh, Prachi Thakur, she's asking, what if our bank is not a member of IIBX and not a clearing member of IIBX? How will the remittance take place if our client is a QJ?
Which is a simple how you send
Yeah.
any dollar to any other bank. So that's how it will be sent.
That's right. You don't need, your bank need not be a member of IIBX or a clearing member. Whosoever is that banker to the IIBX, you will have to send the remittance to that bank.
Yes.
That's right.
And all those details. So just to tell you, there are 11 today members. There are 2 professional clearing members. Some are only trading members. Others are trading cum clearing members. So on our website, we have given the names of the bank, their account number, full details on our website. So that, you know, tomorrow, it even by mistake, you don't send it to somebody else. So we have put it on our website also.
Right. Great. I think we have already gone beyond our allocated time. And I really found it quite interesting and quite exciting. I know that we are in for some big and more exciting times. There is one thing more last, I will take it up. Anthony is trying to asking that, is it only for pure gold or Dore is also covered?
So, okay. So at this point, it is 995 purity 1 kg. In fact, I should have said it in the beginning.
Yeah, you have got
so 995 1 kg and 999 grams. So these are the 2. So we have LBMA approved bars, which are for 995 1 kg and 999 grams. And for UAE good delivery, because there is a SEPA which has been signed between Government of India and UAE government. So UAE good delivery bars have also been enabled for the 995 1 kg.
So the
Dore, no, but it is my dream at some day. You know, in Dore is also coming to exchange. It's a. I mean, let's leave that aside.
Right. I think you have already covered that, Ashokji. If that somebody is asking, is there any criteria or due diligence done by IIBX while onboarding a QJ? You have already covered that. Yes. There is quite an elaborate process for that. So with this, I would like to maybe close it at this point of time. Thanks very much for your time. Yeah,
just one point. I just have a request to all the participants. Kindly, the banks who have not yet formed the policies and rules, kindly do so, because many of the qualified jewelers are reaching out to us that some of the banks are not able to do. I mean, it is this from the pure business commercial perspective also kindly see, because if you do not do, they might move the account to somewhere else, because so it's in your interest that you at least enable it, because then the forex flow remains with you.
All right. Thank you. Thanks to you, Ashokji, and thanks to all the participants for joining in. And I think overall, yes, it went quite well, and you have covered all the point and quite exhaustive discussion we had. And I'm sure that member banks participants would have really benefited, and we'll see the volumes growing in the coming days, all these things. And I'll be waiting for the launch of all these gold repo, gold metal, and loan and lease products. Thank you. All the best to you.
Thank you. I'm so happy for giving this opportunity. Thank you very much, Ashwini ji, and to FEDI and to all the participants. Thank you.
Thank you. My pleasure, sir.
Thank you.